It remains to be seen whether the president can have his way on taxes. But for all the talk about infrastructure and the general agreement something needs to be done, we don't always hear exactly what it would accomplish. So we asked someone who spent his career walking the halls of power in Washington and on Wall Street, Evercore co-chairman and co-CEO Ralph Schlosstein.
It's going to provide longer term, not immediate stimulus, because as we all know, the idea of quote unquote shovel ready projects for economic stimulus has been tried in many past recessions and doesn't really work because shovel ready never seems to be shovel ready. I think the proposition that we need to make multi-hundred billion, perhaps trillion-ish dollar investments in roads, bridges, broadband, all things that enhance productivity over the intermediate to longer term. I think there's broad-based agreement on that. And I think there is still compromise or disagreement on the amount. There's certainly disagreement on what constitutes infrastructure. And there are certainly things in President Biden's proposal that expand the historical definition of infrastructure. And then, of course, there's the big question about how does this get financed, however large it is. And, I think one of the concerns that perhaps drives the Republican proposals is that they're generally opposed to any sort of tax increase or any increase in taxes to finance these investments. And, Democrats are obviously a little bit more receptive to that.
So it looks like the economy is coming back. Earnings are coming in pretty strong so far. How do you see it from your chair? Where's the economy? Where is business?
I think the economy is in very, very good shape, poised to make a quite rapid recovery. And I believe, if anything, the economy is going to surprise on the upside because there's so much pent up demand to consume, so much buildup of net worth and savings on personal balance sheets that if we're going to get a surprise, I believe it's on the upside. And I think if we're going to get a surprise in unemployment, I think it will be in how rapidly it declines. And I think if we get a surprise in earnings, it will also be on the upside.
So I think one of the questions people have is, people expect that sort of upswing, no question. Is it going to be a sugar-ish, a sugar high that we come down off of quickly? Or what do you think about the longer-term prospects, not just for 2021, but going into 2022 and beyond?
Well, the challenge here is to get back to potential as rapidly as possible, but not on a path that causes you to overshoot and cause longer term and more sustained inflation. As you said in your opening remarks, the amount of fiscal and monetary stimulus that has been applied is absolutely unprecedented. And the rapidity with which it's been applied is also unprecedented. So we're a little bit in uncharted waters as to what happens after we get closer to potential growth. I will say that over the long term, we have to get more balance between revenues and expenditures in the government. The pace at which debt is expanding is tolerable in a period of economic decline like we've been in for the last year or so, but it's not sustainable over the longer term.
One of the advantages, I think, of your job is you get to talk to CEOs all the time. Are they concerned about overshooting, I think was the term you used? Are they worried about running the economy too hot?
At this point, I'd say there's very little concern about that. CEOs are concerned about making sure they have sufficient trained and qualified workers. They're concerned about their supply chains due to the rapidity of the recovery. But at this point, we're still so far away from, capacity that concern really doesn't exist today. And I will say also that the logical concern that one might have is that inflation is sustained at a much higher level than we would like. And I do believe that technology, including some of the advances that we've made as a result of COVID, does serve as a longer-term depressant on inflation.
So, Ralph, finally, let's come back to your core business. Let's talk about mergers and acquisitions. How is that going right now? And how has the massive fiscal and monetary stimulus affected it? And perhaps how would infrastructure affect it if it came in at hundreds of billions or, as you say, into the trillion-ish numbers?
Well, I always say that in order to have a good M&A environment, you have to have reasonably strong equity markets, very accommodative debt markets, pretty clear visibility as to the direction of the economy, CEO confidence, and some amount of cash on corporate and private equity balance sheets certainly helps as well. All of those ingredients are in place. So we've just had 2 consecutive quarters where announced M&A activity exceeded $1 trillion. First time that's happened in quite a while. Activity is very high. Backlogs are high. Our people are running flat out. So for M&A, this is about as good as it gets.